talked about 3 basic financial statements. We started off with 3 basic financial statements. What I said was, we said balance sheet. The next what we talked about, attendance you can do it later, just leave it, just keep it, it distracts a little bit. After that, the second statement what we talked about is profit or loss statement. And third statement what I just mentioned, I did not write it, was cash flow statement. We will not discuss that as of now, we will keep it aside as of now, we will talk only about these 2 statements. The second aspect what I talked about these 2 statements is, one, the statement 1, that is what we call it as the balance sheet, pertains to what you own and what you owe, that is all. What you own as on a particular day, that is as on the day you are preparing your financial statement or what we call it as the balance sheet, whatever you own and whatever you owe as on that day, that is all what does the balance sheet contain. Move to the next aspect. When we talk about the profit or loss statement or income statement or revenue expenditure statement used in different contexts depending on the kind of concern for which you are sort of preparing it, we talk about all the revenues that has come in, not profit, please understand, all the revenues that has come in and all the expenditure that has basically been incurred. I never said all the cash which has come in or all the cash which has gone out, please understand, I never used that statement. I said all the revenue that the organization has earned or all the expenditure that you have incurred. The other way to put it is all the expenditure and income that have accrued, that is accrual concept is what I used out there. When I say it is accrued, I meant that specifically if you have earned an income, irrespective of whether you have received or not, you have earned it, you are eligible to get it. You have incurred an expenditure, whether you have paid or not, let us not worry about it, but the expenditures are accrued for you. All such revenue and expenditure is what we will record in a P&L statement or a income statement, etc. The next aspect is the P&L statement or the income statement is for a specified time period. That is the next aspect what I sort of stressed upon in the last class. When I say it is for a specified time period, it could be for a day, it could be for an hour, it could be for a week, it could be for a month, it could be for a year, etc. That is this particular date, the beginning date to the end date, whatever revenue you have earned, whatever expenditure you have incurred or accrued or in income accrued or expenditure accrued, all that will consolidated get recorded out there. With you on this? Now, the next aspect I move on from there. The next aspect what I move on from there is what we talk about. Beyond every statement, every financial transaction you talk about will always have minimum of 2 basic aspects out there. It will be affecting minimum of 2 basic aspects. What we talked about when I sort of talked about the P&L statement and the balance sheet is every financial transaction you take which can be expressed in monetary terms, it will always affect 2 aspects, that is we talked about 4, that is what we talked about as of now: assets, liabilities, income, expenditure, 4, that is what I wanted to write anyway, not a problem. Now, among these 4 aspects, every transaction you take has normally 2 sides, that is what we call it as typically in accounting parlance double entry, that is it will affect 2 accounts, that is what a typical accountant will say. It will have effect on 2 parts out there, either an asset and a liability or an asset and an income or an expenditure and an income, whatever combination, or 2 accounts in an asset itself. Thank you. For example, I said I transfer money to bank. When I transfer money to bank, what happens? Your cash in your asset basically goes down and the bank balance in your, which is also your asset, basically enhances out there. So, every transaction will have minimum 2. Why minimum 2? We will come to that when we sort of take up some numericals out there. Minimum 2, sometimes 3, sometimes 4 also could be possible. Minimum it will have an effect. For example, I borrow money from a bank. What happens? A liability gets affected. What does the liability get affected? It gets enhanced. There is a liability which gets enhanced. Then there is a cash which also gets enhanced, that is, there is an asset which also gets enhanced out there. Now, I make a sale and then I have provided, imagine I have provided a consulting service and then I have earned an income. So, what happens? There is an income, that is, your revenue is increasing in your P&L statement, and consequently what is happening? Your cash, that is whatever money that you received in the form of consulting fee, that your cash balance is also increasing in the process. Then immediate question, how will the balance sheet balance? Do not worry about that, we will take care of it, we will take care of it as we go along. So, every transaction you take, it will have an effect at least in minimum 2 of the 4 aspects what I mentioned out there. Simple, you have a stock of goods out there. Some part of it gets damaged beyond repair, you just throw it. What happens? What you own as an asset basically reduces, agreed, asset reduces. Now, that is what for you? That is a expenditure, loss for you. So, what do? You write it in your profit and loss statement as an expenditure which is abnormal loss. If it is a abnormal loss out there, that is what happens. So, any transaction minimum 2 basic aspects. So, based on that we took up the sheet. I hope all of you would have brought this, I specifically mentioned it. Thank you, Navya. Yeah. We talked about at least, we addressed about first 4 or 5 statements out there. Go to the Excel, sir. We talked about the first 4 or 5 statements out there. We talked about when you begin a business out there with an equity capital, what happens out here? There is an equity shareholding that comes in, that is out here, and there is a cash which also goes in out there. You want me to start redoing it, or the first 5 transactions are clear? We move on beyond 5th one. First 5 are clear, right? We move on beyond that, right? Let us take up the next one, 6th one. 1st January, the company purchased a new plant and machinery for 45 lakhs through an equipment loan. So, you have purchased a machinery for 45 lakhs through an equipment loan. When that happens, what happens? An asset that comes in for 45 lakhs. So, what happens? Your asset increases, long term asset increases out there. Then consequently what happens? There is a liability also which is increasing. I am keeping statements very simple for you to feel comfortable and get tuned to it, right. So, that is what happens. Make an entry on that. Right. Okay. Prawn and Company purchased special raw material on 15th of January 2018, because normally when we make an entry like this, there is one more out there. When we sort of do a journalizing of typical accountant, when we do, there is also a column for a date, there is a column for a ledger folio, etc., etc. I have removed all that for the purpose of ease of understanding out there as of now. On 15th of January, you purchase special raw material for rupees 30 lakhs on a 90-day credit with a cash discount of 10% applicable if paid within 10 days. Now, what has happened? Slightly complicated? No. What is the transaction that has happened on that particular day? Can you decipher that? Material asset. Material has been, what is the value of the material? 30 lakhs. Get discount does not apply as of now, because discount applies when? Only if you pay within 10 days. As of now you do not know, you might have the intention to pay. Let us worry about it the day you pay. As of today, what is the, have you paid? You have not paid. As of today, what is the value? Value is 30 lakhs. Yes, there is an asset which has increased by 30 lakhs out there, go down, the stock of special raw material, right, specifically special raw material, because I use another special raw material 30 lakhs. 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 Now, there is a current liability, I think yeah, there is a current liability which is also increasing. What is the current liability which is increasing? That is also payable, what you call it as, typically we use the term called as creditors, creditors for special raw material, creditors for special raw material, please note creditors for special raw material. Now, having said this, enough. No, again 1 0, you love zeros, okay, no problem. Now, what are these distinctions? Current liability, there is a current asset, there is a long term investment, long term liability, fixed asset, etc. Let me spend a minute on these distinctions. Current assets or current liabilities are those which could be, what is current assets are those which can be liquidated or which could be converted to cash very easily, or those aspects that normally gets converted to cash within a year, or those aspects that change the form very quickly. That is, for example, your cash balance, the number, the amount of your cash balance keeps changing every minute, the money in your bank keeps changing every minute, the stock of raw material keeps changing every minute there is a production out there. So, these aspects, that is, the position of these assets keep changing very, very fast out there, that is, it is fast moving basically. So, these are all what is called as your current assets, the assets which are current as of today, this minute, it can change tomorrow. Well, can we say about the same thing about the building or the plant? Well, no, it cannot be, because those are all what we call it as fixed assets out there, long term investment, we call it long term assets, fixed assets, any of those. In addition, I have something called as long term investments out there. When I say long term investments, I specifically mean your company basically investing in other entities. It could be in subsidiaries, it could be in affiliate companies, it could be in government bonds, it could be security deposit where you might have kept something, etc., etc. out there. Please come in, sir, fast. No problem. So, it could be one of those aspects out there. So, that all that what we typically call it as, what you call it as typically what we say is the current asset, your long term investments that are there. On the liability part of it, when we see, first of course is what you call it as shareholders equity. Shareholders equity is basically the fund, that money that shareholders have put in, plus what? Plus reserves and surplus, in short, plus all the money that belongs to the shareholders. What belongs to the shareholders? Profit belongs to the shareholders, profit or loss. Anything that is culled out of profit or loss belongs to the shareholders. So, all the money that is culled out of shareholder, that is culled out of profit belongs to the shareholders. So, all the money belonging to the shareholder, that is what we call it as the net worth out there. And addition to, after that is your long term liability. Long term liability is liabilities which is not going to be immediate, which is going to be very long term, a 10-year loan, a 15-year loan, etc., etc. And then you have current liabilities. Normally, when we say current liabilities, these liabilities ought to be paid out normally within a short period of time. That short period of time is, normally we keep it as 1 year, as a year. Normally we keep it as 1 year. Any liability that is to be paid off within a year, in this case it is a 90-day credit, so it is a current liability in this process. Am I with you on this? We move ahead. The eighth transaction, eighth transaction out here. The company appointed 4 machine operators at a salary of 10,000 per month each and a manager at a salary of 25,000 per month on Jan 20th, 2018, and the date of joining was 1st of February 2018. What are the entries, sir? As of now, you are only appointed. When does the payment due? Only once they have started working. As of today, there is no payment due. So, let us not worry about it. But when do we have to worry about it? At the February 1st onwards. So, when we finally, no problem. All of you please switch your mobile phone off, alarm, whatever it is, please switch it off. If you have not done it, please do it right now. So, when do we have to worry about it? In this case, we need to worry about it, because when we are, basically this entire list of transactions is for a year. At the end of the year, when you are sort of closing or arriving at the final profit or loss, obviously you will have to take into account, we will worry about it. That is what I just marked it out there. Ninth, the company settled the amount on 24th of January 2018 with regard to the special raw material that is purchased.
In point 8,
One sec. Yeah.
so in point 8 we are saying that the salary is going to be given at the end of February, right?
I never said that. The salary becomes due only once he performs. It never says I am giving in advance.
So, but if we are taking a balance sheet somewhere around February 10th, let's say
Agreed.
February 10th,
Agreed.
we take the 10-day salary as an
10-day salary as an expenditure you will write in your P&L statement, but it is not paid, so it will appear as a liability. That is, supposing on the 10th of February you decide to shut down your factory, you are liable to pay the 10-day salary to them, so that will appear in your current liabilities. Am I with you? Yeah. Now, yeah. Yes, Navya.
For point 8,
Yeah.
date of dawning is February 1st,
Agreed.
right? Should we at this point ask when the salary pays out and according to that only bill it?
Normally, it is believed as far as accounting is concerned, the salary, it becomes a salary only once they have performed the duty. That is, if they have performed the duty on 1st of February and he is resigning right at the 1st of February evening, 1 day salary becomes due, that becomes your liability. If you have paid money upfront on Jan 20th when you make an appointment, that is an advance, that is basically an asset for you, because you have not derived the benefit for the money that you have basically paid. You are eligible to recollect the money back from him. With you on this? Now, move on to the next one. Now is the 9th statement what we talked about. We said that settled, what do you call it, as the on 24th of January, the purchase of special raw material, completely we sort of settled it. Now, what are the, go back to the earlier statement, we bought it on 15th of January on a 90-day credit, but with a condition that a 10% discount, I think 10% if I am not wrong, 10% discount is applicable if it is paid off within 10 days. Now, 24th of January falls within 10 days from the date of purchase. Now, when I said, normally I said 2 parts for a transaction, here you will see the 3rd part for a transaction also, that is what we will see. So, now what happens? First thing what happens, you are paying money, agreed. How much are you paying? 30 lakhs minus 10%, that is you are paying only 27 lakhs. So, what happens? Your cash balance goes down by how much? 27 lakhs out there, cash balance reduces by 27 lakhs, or cash or bank, I mean basically your bank balance reduces by 27 lakhs out there. First part of a transaction, agreed, over, fine. Now, second part of a transaction, whatever that was due out here 30 lakhs, you have paid 27 lakhs cash, so it goes down by 27 lakhs first, reduce it by 27 lakhs. Now, that other 3 lakhs is what you have received as what is called as a discount, that is what is called as, it is a revenue for you, that is it is a gain for you. Am I with you or not? So, what happens? Now, go to the income side. Now, when on the income side I will say discount received. Discount received how much? 3 lakhs is the discount that you have received. When I have received the 3 lakhs as discount, is this still due out here? Is the 3 lakhs still due on the payment of raw material? That basically is not due, because that is received as a income, that is received as an income out there. So, in this case what did you see? 4 different aspects out there, right? 4 different aspects out there for a transaction, that is first part of the transaction, payment. We split the transaction, please understand what did I do? I split the transaction, I cut it out at the point of payment. First I say payment is made, over. Now I go to the next part of the transaction. What is the next part of the transaction? Discount received. Discount received is basically gain for you or not? That is what I recorded. Am I with you on this? So, when I say a transaction is more than 2 or minimum 2, here you could see that minimum 2, it is going beyond the 2 aspects out here. Am I with you? Any doubts at this stage, sir? Nothing? Clear? Am I with you, sir? Am I communicating, sir? Yes, please.
The 27 lakhs that you paid for raw material, should that be also counted in expense? Because you spent some.
I have spent some, so what have I got? I have raw material. So who owns it? Have you, so when you own it, what is it? That's all what I have done. When does it become what is called as, when I use it and basically make a sale out of it, that is when it becomes an expenditure out there. Yeah, please. Balance sheet, I have said at the end of every transaction. I never specified a date out here, right? Because each transaction is on a specific date. So I'll have to keep changing the date. That is one of the reasons I said that. Let us look at it at the end of every transaction. Basically, imagine each transaction is on a different day, because I don't have 365 transactions. So there are only about 30 or 40. Each transaction, you write the date, and at the end of every date, you say this is the balance sheet, right? That's a good question, but this is how you will understand it. Now we move to the 10th one. On 1st of April 2018, the company purchased cars and utility vehicles for office and industrial use at a cost of 42 lakhs. Down payment of 4 lakhs was made at the time of purchase. Again, more than 2. First of all, what has happened? You have purchased cars and utility vehicles, whatever, a motor car, whatever, utility vehicles you have purchased for the worth of about 42 lakhs. So, moment you make a purchase, who owns it? Your company owns it. So, it is an asset for the company. Asset, vehicles, 42 lakhs. Vehicles, put it as vehicles. It is not car, it is cars plus utility vehicles. That is why put as vehicles. Now, move to the next part. What has happened? You have paid 4 lakhs. Moment you have paid 4 lakhs, what happens? Your bank balance comes down by 4 lakhs out there. Sorry, sir, you are not able to see. With you on this? 1 second, sir, 1 second, sir, 1 second. 42 lakhs is the value of the purchase. 4 lakhs you have paid. That means another 38 lakhs is to be paid. It's a long term liability. It cannot be a current liability, obviously. It's a long term liability. 1 second, I'll come to you. Long term liability for vehicles, what happens? 38 lakhs. Long term for vehicles, liability for vehicles or loan for vehicles, whatever you want, you write. $38 lakhs. Am I with you on this? Now your question, sir.
If we make a front payment for 40 lakhs, then can it come to current asset?
If you make a complete payment of 40 lakhs out there or 42 lakhs out there, then what happens? There is a long term, vehicle is a long term investment. It is not going to change the position every time. It's a long term asset. Then what happens? Your current asset, your bank balance goes down by 42 lakhs. That's all. Supposing you had bought this vehicle for entirely your cash, then what happens? Vehicles would have remained at 42 lakhs. The bank balance, instead of going down by 4 lakhs, would have gone down by 42 lakhs in the process. That is all that would have happened. It's a long term asset. Vehicle, see, normally short term asset keeps changing position every minute. A vehicle, when you buy, the value of the vehicle does not change every minute. Of course, one can argue depreciation, but still.
As the raw material can be converted to cash quickly, the same way the vehicle also.
Vehicle, that is if you are automobile dealer. Yes. For a company, when you are buying a vehicle, you are buying a utility vehicle for transporting your own equipment. For example, you purchase a car for the managing director of the company. It is not used for basically your business. It's used for a different purpose. The purpose is not to convert that asset into, right? So that is the reason. Move on. Looks fairly simple, right? So this is all the balance sheet and P&L, right? Balance sheet, P&L accounting is so simple. Don't make it too complicated. We go to the 11th transaction. During the course of the year, based on technical expertise of the staff, the company also provided consulting services to other manufacturers and received a check to the tune of rupees 26 lakhs as consulting fee. Now what happened? What happens? Huh? Income, consulting fee 26 lakhs straight. Current account, you instead of current account is fine, you just put it as bank account, that's better. Current account is bank account. Yeah. Huh? Bank account, yeah, because you received a check, basically 26 lakhs, the bank account, it basically goes up. Now, 1 second, sir, Rishabh, 1 second. Now, you would be constantly worried 26 lakhs is fine. How many zeros you have added? You just see. I think you are adding too many zeros every time. Pratik, huh? You had breakfast, right? Then fine. Now, see, at every stage, what you see? You go down. Your balance sheet, the liabilities and assets are always the same. How is it? How is the liability and asset always the same? Move this side. If you actually look at, there is a total income. The expenditure as of now is 0. What is the profit? Profit is entire thing is 29 lakhs out there so far. Whatever is the profit you have earned, 20, whatever, the money. To whom does the profit belong? So what happens in the equity, on the equity side? Go up. So what happens out here? The value, the money that is this 29 lakhs, the profit what you are earning, it basically belongs to the shareholders. So that is just constantly getting added out here to the capital or the equity of the shareholders out there. That's all. You want me to explain again? No, if we are silent, then I don't. Yes or no is fine. Huh? Whatever the profit or loss, yes, of course, yes. Profit or loss, whatever is the profit or loss, it automatically gets basically what do you call it as? It is to be borne by the equity holders. That's all. Yes, Rishabh, your question.
We make a down payment of 4 lakh rupees.
Ah.
Impact the expenses.
Why?
Because it is also an expense.
When does it become an expense? When you have derived the benefit of it. Have I derived the benefit of the vehicle completely? What part will get added? Only depreciation part will get added. Depreciation on the entire value of the vehicle, not only on 4 lakhs. I explain this again. Why is the asset equal to your liabilities? As I said, sources equal to utilization. This is another word which I used out there. Your sources of fund equal to utilization of funds. What is the utilization? Could be in the sense your part of your current asset also, what the money in the bank also is basically that is there, that is your, it is lying unutilized, but it's there, your money. Your sources is increasing. How is it increasing? Every time you are making a profit, the profit is getting accumulated, getting flowed back to the capital, right? It is getting added to the capital out there. That is what we see out here. Go up. The profit whatever you have made, because profit belongs to whom? Because these two you have made, these two are the transactions that has happened and both have generated income. There is no expenditure as of now. The income belongs to whom? Belongs to these fellows. I am flowing it back. When I am flowing it back, it automatically is getting adjusted with my increased cash or bank balance or whatever, stock balance, etc. out there. That's all. Am I with you on this? Yeah.
Sir, even the loss goes to the shareholder.
Of course, yes. Of course, yes. Let us take, there is no transaction here. I am just taking for example for the benefit of. Now, there is a sudden fine imposed by the government for some activity that this firm has done, and there is a fine that is imposed on this organization to pay, or you have paid about, let us say about whatever the cash and bank balance put together, about let us say 3 crore out here, yeah, 3.6 crores is what you have basically paid out. Then what happens? If you have paid out 3.6 crores out there, your cash and bank balance becomes completely zero, whatever is there. Imagine, just make an entry out there. Your cash and bank balance out there completely cancel out, 309 minus 309, whatever the number of zeros, enough. 6 lakhs, minus 6 lakhs. Right? Imagine you are paying out as a fine, go to the expenditure. Fine, payment of fine. Don't make an entry, I have not added this. Payment of fine, whatever is a 309, whatever plus 309, slow, 9, slow, plus 6 lakhs. So what happens? Now what happens? Go down, go down, further, I want to see the loss. Now what happens? There is a profit before tax, move one column, there is a negative, because the income what you have earned and the expenditure that you have incurred is higher. Now go to the go to the balance sheet, go down. What has happened? The entire thing is basically sitting out as a loss out there. If the entire thing is sitting out as a loss out there, what is happening? That is more than the capital that you have invested. That means your net worth has become negative. When your net worth becomes negative, what is the holding the equity shareholders have? Zero. Their value of their share is blob. The company in that case ceases to exist. Am I with you? Profit or loss, both are borne only by the equity providers. Am I with you on this? So what happens if tomorrow any company that you have invested in makes a huge amount of loss? I mean, as an equity holder, do I have to bear entire loss? You know, your loss is limited to the extent of your investment. What is the value of your share? Value of your share is 10 rupees face value. Forget about the market value at which you have bought. Value of your share is 10 rupees. That is that which was share certificate. Earlier it used to be a share certificate which was worth 10 rupees or whatever, now has become a tissue paper. That's all. Move on further. Am I with you on this?